Greetings, everyone, and welcome to today's ReConnect Program Regulation Overview webinar. So thank you very much for joining us today. And with that, I'd now like to introduce and turn the presentation over to Rural Development Chief of Staff, Farah Ahmad. Farah?
Thank you so much. It is a pleasure to be here, and I am thrilled that you all are joining us today to have some dialogue with us about ReConnect. It's so important, and it's important that you're here because we can't do this work without you. As many of you know, there are more than 30 million Americans who are living in areas where there isn't sufficient broadband infrastructure at acceptable speeds. And we know that Americans in rural communities and on tribal lands are particularly lacking of that adequate access. And while we have some exciting things to report, like the recent infrastructure bill passage, we know it's just one important step to addressing that challenge. But I am very hopeful. I am so thankful that President Biden's American Jobs Plan is prioritizing building future-proof broadband infrastructure, and broadband infrastructure that is high quality, that is affordable, and that's accessible. And we want to make sure that that high quality, affordable, and accessible broadband is reaching the furthest corner of every state and every territory so that we can finally reach 100% high-speed broadband coverage nationwide. And you'll hear more from our amazing USDA team today about some of the changes that we've made in our ReConnect program. But what I really want to emphasize is that what you'll be hearing about are clear improvements to the program, things that are really good for everyone and have been made to drive the administration's commitment to expanding access to broadband, particularly to unserved and underserved areas. Some of those changes, for example, will be a simplified, streamlined application. We know that's good for everyone. We know that federal applications can sometimes be complicated or unwieldy, and we hope that this is a good step in making that process easier. You'll also hear about a reduction in the amount of supporting information needed as well. And one other key change to highlight is you'll hear about increasing speeds, both about our definitions of sufficient access and also what we want to build out to make sure that all Americans have high quality broadband. So we look forward to digging into that with you today. And we also look forward to any forthcoming applications from you and being able to review those. And we want to share a couple of points of interest for us as we're reviewing those applications. So we look forward to looking at applications in particular that help people in rural communities recover economically from the impacts of COVID-19, particularly the most disadvantaged communities. We would love to see projects that ensure that all people in rural communities have equitable access and that the projects benefit everybody. And we also look forward to seeing projects that have an impact when it comes to reducing climate pollution and increasing resilience to the impacts of climate change through different types of economic support for rural communities. And so before I hand it over to our team to really dig into the details that we are very excited to share with you today, I just want to end by saying thank you for your partnership and for your shared commitment to building and bringing about high quality broadband access to all rural communities. So please listen closely, ask your questions, and we look forward to them. Thanks so much.
Thank you very much, Farah. I just have a few more items to cover before I introduce our main presenter. If you have submitted a question before the presentation via the webinar questionnaire form, we will be following up with you after the presentation. And we'll take questions submitted during the presentation as time permits. We'll also provide you with a list of resources at the end that include a link to the Contact Us form on the ReConnect website. Additionally, as we discuss eligibility requirements throughout the presentation, please know that RUS is planning a series of webinars and workshops to provide a detailed review of the application components. and a link to register for the upcoming workshops and webinars will be provided at the end of the presentation. So with that, I'd now like to introduce Tim Brooks, Telecommunications General Field Representative, who will be today's main presenter. Tim, the floor is yours.
Good afternoon and welcome. Thank you for your time and joining us in this webinar today. Just a little background. Currently, I'm the General Field Rep for New England and acting GFR Supervisor for our Branch 2 area. And so with that, I will start our agenda. In this webinar, we will cover an overview of the ReConnect regulation, including requirements, application tips, and additional resources available for applicants. And at the end, of course, we will have a Q&A session. And so again, reminder to add your Q&A questions as we go. And to begin, at the ReConnect regulation webinar, I want to start with some background on the ReConnect program. In 2018, over $2.4 billion has been appropriated by Congress for the ReConnect program. The ReConnect program exists to provide loans and grants to extend broadband service to rural areas that do not have sufficient access to broadband. As you can see, it was a pilot program and it was codified in February of 2021. And the regulation, as you see, is 7 CFR, Code of Federal Regulations 1740. This is a recap of the current funding opportunities announcements for round 1 and round 2. And it's always interesting. I'm a statistician, so I like the numbers. And as you can see, your chances of receiving loans and grants and award funds are very high. And in the loans, we received 22 loan applications. We funded 7 in both rounds. We received 201 grant applications and awarded 120. And of course, the 50-50 loan and grant program received 95 applications and we funded 54 for a total project funded 181 projects for 1.51 billion. And in both rounds, round 1, 33 states, and round 2, 37 states. We will now look at an overview of the ReConnect program, funding parameters, and eligibility. As I mentioned earlier, the program was codified in February 26 of 2021. And the regulation provides the requirements that don't change often, as well as explaining requirements that will be defined and explained by ReConnect funding opportunity announcements. Of course, there's a website there to see the regulation, and you can Google, I'll probably mention a couple of times, if you Google USDA ReConnect program, you can search it there and find it under one of the tabs there for the FOA and the regulation. The funding parameters, 90% of households in proposed funded service areas, we call them PFSAs, must lack sufficient access to broadband service as defined in the current FOA. And of course, we all know that's 100 megabits per second down by 20 megabits per second up. A proposed network that can provide broadband service to every premises within the PFSA at the speed defined in the current FOA at the same time. It's a little confusing, and that build out requirement in the FOA is 100 symmetrical megabits per second. Funding categories such as loans, loan and grants, which is the 50-50 loan grant combo, or 100% grants, which are established in the FOA. For build out speed, sufficient access to broadband definition and funding categories, please see the fiscal year 22 FOA. And a reminder that, again, Taylor mentioned it, I'll mention it probably several times. The next webinar will cover additional details in the FOA, and that is on the 18th of this week. Some important definitions. Fixed wireless service, a wireless system between two fixed locations. Broadband service, any fixed terrestrial technology, including fixed wireless, having the capacity to transmit data, voice, and video as set forth in the current FOA. NFSAs, or non-funded service areas, are any area in which the applicant offers or intends to offer service but not requesting funding. PFSAs, which is our favorite, proposed funded service area, that's where the work begins and all the magic happens. The area where the applicant is requesting funds to provide broadband service. Sufficient access to broadband, a rural area in which households have broadband service at the minimum acceptable level of broadband as set forth in the current FOA. Please note that there are additional definitions that are outlined within the FOA, and familiarize yourself with all of those. One definition worth noting here is the broadband service definition. You'll notice it refers to fixed terrestrial technology, which means that cellular systems are not included, but fixed wireless systems are included. Eligibility requirements and ineligible entities. This is really not changed from the prior rounds, except for there's the addition of the limited liability partnership, LLP. Please note here that limited liability partnerships have been added to the entity's eligibility for ReConnect funding. And of course, corporations, pretty much everybody is eligible to apply, except for individuals and legal partnerships formed with individuals or co-applicants. As we discuss eligibility requirements throughout this presentation, please know that Russ is planning services, a series of webinars and workshops to provide a detailed review of the application requirements and components. Now let's shift to eligible projects and service areas. Eligible projects must submit a complete application, including unqualified comparative audited financial statements for the previous year from the date the application is submitted. This is probably one of our largest questions that we get, and it is not for startup companies. The comparative audit is required. The 5-year build out is still the same as prior rounds. Of course, that is from the date that funds are made available. The date that funds are made available sometimes are confused with the date that the award is announced or the letter of an award announcement. But the date the funds are made available is a term later in the timing of the events, and it gives a lot of opportunity for the 5-year build out. You must demonstrate technical feasibility. All project costs can be fully funded or accounted for, financially feasible and sustainable. Facilities with grants must provide broadband service for the composite economic life of the facilities, and facilities with loan funds must provide broadband service through the amortization period of the loan. I might mention that there is no prepayment penalty. Note that the build out period for the project has not changed. It is still 5 years from the date of funds are first made available. And all projects must demonstrate both technical and financial feasibility. We'll provide a few details of each of those topics in a few minutes. Next is high level eligibility requirements. Eligible service areas. Provide broadband access directly to all premises in PFSA. If any part of the PFSA is ineligible, RUS may request modifications or reject the application. Service areas of existing RUS borrowers without sufficient access to broadband as defined in the current FOA are eligible for ReConnect funding. I might note, in contrast, if these existing borrowers are providing sufficient access to broadband, the areas are ineligible for ReConnect funding. It is up to the applicant to prove the area is not providing the 100 by 20 service to 90% of the households within the PFSAs. Ineligible service areas are overlapping proposed project service areas, prior funded service areas providing sufficient access to broadband as defined in the current FOA. RUS broadband loans, including ReConnect awards, RUS, Rural Utility Service, I should say, Community Connect grants, and RUS, Broadband Initiatives Program, we refer to as BIP. A continued of the eligible and ineligible service areas. We recommend working with the governor's offices and tribal governments to submit information detailing where state funding has been provided. A certification from the appropriate tribal official is required if service is being proposed over or on tribal lands. Any application that does not provide a certification to provide service on a tribal lands identified in the PFSA will not be considered for funding. Service areas that receive federal broadband service grants or funds from the FCC may be restricted from funding. Please review the FOA for more details. Additional service area restrictions may also be identified in the current FOA. One note I have with other federal funds, no other federal funds for funding mechanisms are allowed. In the next few slides, we will cover an overview of the eligible and ineligible costs for ReConnect. Eligible costs must be reasonable, allocable, and necessary for the project. Incurred post-award, except those approved pre-application expenses. Consistent with the 2 CFR Code of Federal Regulation 200, Subpart E for cost principles. Award funds may be used to fund construction or improvement of facilities required to provide fixed terrestrial broadband service and any other facilities required for providing other services over the same facilities. Reasonable pre-application expenses not to exceed 5% of the award. 100% loans only, for 100% loans only, the acquisition of an existing system that does not currently provide sufficient access to broadband for upgrading that system to meet the requirements of this regulation, not to exceed 40% of the award. This slide outlines the appropriate usage of award funds for the ReConnect program. Again, these provisions have not changed since the last round of funding, with one exception. Expenses associated with environmental compliance that are incurred prior to an application being submitted may be considered a reasonable pre-application expense. Consult the FOA for more information. And just a side note, we do allow 3% for pre-application expenses for the environmental pre-application expense, with pre-application expenses, again, not to exceed 5% of the total award. Award funds may not be used to fund operating expenses. Just a quick little example there. I've had several requests for salary and administration for those wanting to get paid to read the application guide and webinars and stuff. That would be nice, but that's not allowed. Cost incurred prior to application submission date, with the exception of reasonable pre-application expenses as determined by RUS. Acquisition of an affiliate are ineligible. Purchase or acquisition of an affiliate's facilities or equipment, acquisition of a system previously funded by RUS, and purchase or lease of a vehicle other than those used primarily in construction or system improvements. So no Lamborghini on the federal dime this time, unfortunately. One note, the CFR for ineligible and eligible expenses is 7 CFR 1740.12. Ineligible cost purposes. Award funds may not be used to fund broadband facilities leased under the terms of an operating lease or an IRU, indefeasible rights of use agreement. Merger or consolidation of entities, costs in acquiring spectrum for an FCC auction or secondary market acquisition, facilities that provide mobile services, facilities that provide satellite service, including satellite backbone services, acquisition of a system providing sufficient access to broadband, or refinancing of outstanding debt. We will now cover additional award considerations. SUDA, substantially underserved trust areas. Applicants may request consideration under SUDA provisions. The administrator can designate a community as a SUDA if it has high need for the program's benefits. To receive consideration under SUDA, the applicant must submit a completed application, including all information requested in the CFR 7 CFR 1700 subpart D. Equity and matching fund requirements for facilities cannot be waived. Non-duplication requirements cannot be waived. We will now cover the pre and post award public notice filings, and public notice responses. Public notice, pre-award public notice. Russ will post the following information to the mapping tool for each submitted application: the application identity, service areas, type of funding requested, application status, number of households without sufficient access to broadband. Post-award public notice for approved projects. The information in the pre-award public notice, as well as each required annual report, will be made available to the public. This information will be posted on the public service area map on the ReConnect website. Again, if you have trouble finding it on slide 58, we do have the website, and we also you can Google USDA ReConnect. P&F's public notice filings continued. USDA will publish a P&F for each application, which will include the following information: application name, areas to be served, including the identification of associated census blocks, amount and type of funding requested, status of the application, number of households without sufficient access to broadband, description of the proposed broadband project, map of each proposed funded service area, the estimated number and proportion of service points in the proposed service territory without fixed broadband service, whether terrestrial or wireless, and any other information required of the applicant in the funding notice. PFSAs of submitted applications are posted through the RUS mapping tool. Existing service providers have 45 days to respond by submitting. I might add that after the February 24th, or I guess February 22nd round of closing, it's going to take a couple days for us to upload the maps to the mapping tool in order to begin the 45-day PNR process. So just keep that in mind. But existing service providers have 45 days to respond by submitting number of customers purchasing sufficient broadband access, transmission rates, and service costs, number of customers receiving voice and video services, and the rates, map showing where the existing service providers' services coincide with the applicant's service area, test results demonstrating that sufficient broadband access is being provided. Russ will then contact the PNR respondents to validate their submissions by providing additional information, having a technician on site during field validations by RUS staff, run on-site tests with RUS staff present, and providing copies of test results and validating the information submitted in the PNR. This is the SAV, service area validation, in a sense. Russ will notify respondents if their challenge was successful or not and allow for response. Conclusive evidence as to the existence of sufficient access to broadband will be taken only through the public notice process. This is the most important part of the slide, And just a reminder that only those that file a PNR will have what's called an SAV, service area validation, within a PFSA. So conclusive evidence as to the existence of sufficient access to broadband will be taken only through the public notice process. If there is not one, there will not be an SAV. In the next slide, we will look at environmental review requirements. All applicants must follow requirements outlined in the CFR 1970, complete site, route, and project environmental questionnaires, provide a description of program activities, submit all required environmental documentation, and obtain all required federal, tribal, state, and local government permits. I mentioned that if you have a way to go around a sensitive environmental area, make sure you do so at this time of the developing your application, because you might save yourself some time in the NEPA requirements within the 1970. Applications must contain sufficient information to allow for NEPA analysis. Funds may be withheld until the awardee submits additional environmental compliance information to assess environmental impact. It's also good to note that work with your local GFRs on timing and starting of projects, because there are certain key timing and strategies to timing of certain things before then, after the environmental is approved, the NEPA process is approved. Section 106 process. This is SHPO, State Historical Preservation. If proposed projects have the potential to impact historic properties, a Section 106 review will take place. Please note that consult with the GFR or USDA prior to reaching out to any SHPO or THPO offices in order to get guidance from us before working with the state or tribes. USDA will gather, I should say state SHPO or THPO office. USDA will gather information to determine if any properties in the project area may be affected by the project are listed or are eligible for listing in the National Register of Historic Places. If it is determined there may be potential adverse effects on historic properties, the USDA will explore ways to avoid, minimize, or mitigate adverse effects to the historical properties. One of these measures may include monitoring of construction. Monitoring may require that tribal or other monitors, SHPO, THPO offices be present during the project construction. If monitoring costs are considered part of the construction costs and are capitalized, the costs of the monitors are considered professional costs and are eligible to be funded with a ReConnect award. Up to 3% of the award can be requested to cover tribal monitoring costs. Costs above this amount must be covered by the awardee and are not eligible for reimbursement. Please do not get this 3% cost of monitoring confused with the 3% environmental pre-application costs that are obviously capped at 5% pre-application costs. A little bit confusing, but there's 3% areas. The 3% for monitoring expenses is in addition to the environmental review costs included in the pre-award expenses that I talked about earlier. Awardees will be required to submit a copy of the agreement with the tribal or state historical preservation officer and the associated invoices when requesting funds. We will now cover additional ReConnect program considerations such as interest rates, terms, and conditions, security, and more. Interest rates. Interest rates will be included in the current FOA. Just a side note is the reason that the interest rates are in the FOA is that they can change in the future for different rounds, and we have some flexibility by doing it that way. Direct cost of money loans Interest rate equals to the cost of borrowing to the Department of Treasury. 100% loans may provide a reduced interest rate. Currently, our loan interest rate is a 2%, loan only, I should say, is 2% fixed. And back to the Treasury borrowing, it is the interest rate is at the time that you have requested the funds, at the time that you get your draw. Terms and conditions, principal and interest payments, there's a 3-year deferral. Loan repayment period, expected composite economic life of the project asset plus 3 years. Interest begins occurring on the date of each loan advance. I shouldn't have said draws, but advances in the earlier slide. All construction in advance of funds must be completed no later than 5 years from the time the funds are made available. Just a key note on the 5 years. I think it's important that, you know, with inflationary fears and supply chain issues, you know, keep that in mind in your budgets for building out your system, you know, for the long term in the 5-year window. Things won't necessarily cost what they are today tomorrow, as we're finding out pretty rapidly. No funds will be dispersed until all other sources of funding have been obtained and any other pre-award conditions have been met. Security. Loans and loan grant combination security. Corporations and limited liability entities, the loan and loan grant combinations must be secured by all assets. Tribal entities and municipalities, RUS will develop appropriate security arrangements. All property and facilities purchased with award funds must be owned by the awardee. That's a big question that I get from a lot of applicants or interested people in ReConnect is, you know, whether they can have somebody build it and apply, but you know, all property and facilities purchased with award funds must be owned by the awardee. Grant security. Government must be given an exclusive first lien on all grant funded assets, and awardees must prepay the grant if the project is sold or transferred without approval. Please note here that all property and facilities purchased with award funds, again, must be owned by the awardee. Substitution of collateral. Loans and loan grant combination. Applicants are required to pledge all assets and revenues as collateral. Applicants may propose other forms of collateral if the amount is equal to the full amount of the loan. I might also mention that we do allow on the loan and the loan grant combo flexibility with other banks and interested parties for pari passu agreements going forward, so that is an option. Irrevocable letter of credit. Grants, applicants may request that standard grant security agreements be replaced with an irrevocable letter of credit. Must be for the full amount of the award, must remain in place until the project is completed. Final financial projections, financial ratios, and NFSA maps not required. I will add here that if you are required to complete an audit every year, so you will need to do that under the reporting. We'll talk about that more later. Advance of funds and Buy America. Advances are made at the request of the awardee according to the procedures in the award documents. All non-RUS funds, including match funds and cash provided in lieu of RUS loan funds, must be expended first, followed by loan funds and then grant funds, except RUS approved pre-application expenses. Just a reminder that if you have a project that's $1 million and you come in at 500,000, that's great, but it might not necessarily be a 50-50 loan or 100% grant when you cut it all out. Grant funds may be used for eligible pre-application expenses only on the first advance request. Buy American. Awardees must adhere to the Buy American regulations, which is the 7 CFR 1740.46. This section also provides a link to 7 CFR Part 1787, which contains the Buy American requirements implemented by RUS. I will also add here that the Buy American requirements for telecom countries are different than the RUS electrification Buy American countries list, FY. Civil rights procedures and requirements. Equal Credit Opportunity Act and 7 CFR Part 15. Obviously, these are all applicable. Equal opportunity, non-discrimination for any federal award. Civil rights compliance with the ADA of 1990, title, I'm bad with my stuff, but Civil Rights Act of 1964, Roman numerals always get me. Sorry about that. Section 504 of the Rehabilitation Act of 1973. Discrimination complaints may be filed with the USDA Director, Office of Adjudication. Must be filed no later than 180 days from the date of the alleged discrimination. Seven guiding principles for funding on tribal lands and in indigenous communities. These principles are designed to aid federal agencies in designing and improving programs that fund infrastructure projects involving tribal nations, tribal lands, and indigenous peoples. Allow tribal self-certification of served. Tribal governments are the official authority on whether tribal lands are served, unserved, or unserved by providers of a specific infrastructure sector. Federal agencies should consult with the tribal governments to determine whether tribal land is adequately served. The USDA is currently taking actions to implement this principle. Require tribal resolutions of support. Require any applicant seeking funds to build infrastructure on tribal lands to have a resolution of support from the appropriate tribal government in order to be eligible to receive those funds. And lastly, require compliance with tribal law. Include language requiring compliance with tribal laws and regulations in loan and grant agreements with all borrowers, including non-tribal. Enforce the terms of the loan and grant agreements that fail to comply with tribal laws and regulatory bodies. Continued, do not limit tribal self-government. Infrastructure program requirements cannot require sovereign tribal nations to abrogate their self-government powers, such as the powers to regulate and govern. Allow flexibility. Read ambiguous statutory requirements as flexibly as possible and in favor of tribal nations. Narrow duplication definitions. Read statutory limitations on duplication of funding and services as narrowly and as flexibly as possible when working with the tribal nations to ensure their eligibility to apply for funding and provide infrastructure services in their own lands. Directly fund tribal governments where statutory language allows flexibility. Do not require tribal nations to apply for funding through state governments. Allocate funds directly to tribal governments or create a federally administered fund for tribal nations. In the following slides, we will cover contents of the ReConnect application. As a reminder, RUS will host deep dive webinars and workshops on application components. The application process must be submitted through the online application system, which obviously starts November 24th. Applicants can only submit one application under any funding window. All applicants are required to register for a Dun & Bradstreet number and register in the System for Award Management, SAM, to receive and submit, or you need a CAGE code through SAM. You can start that process. Typically, the SAM process takes a couple weeks to get through, and make sure your certifications on the FOA coming up on the 18th, more information is described on the certifications that are really required and needed and important, and sometimes are overlooked. So start that process early. And the DUNS, most people have DUNS number, but if you don't, it's pretty simple process there. A complete application will include the following: description of the project, including a network design, a map of the PFSAs and any NFSAs, the estimated dollar amount of the funding request with itemized budgets of the proposed project costs, executive summary of the project and applicant, description of the PFSA including premises passed, subscriber projections, and a map of the PFSAs and NFSAs in the agency mapping tool. The application intake system will provide a place for each requirement to be addressed, either by entering information or uploading files. In some cases, the application system will use information supplied by the applicant to calculate portions of the application, such as an evaluation criteria, scores, debt ratios, stuff like that. Continued contents of an application, description or requirements of an application, description of advertised competitor servicing offerings in the same area, a network design, and I might add the network design must include the components listed in 7 CFR 1740.64. We'll also cover this more in upcoming slides. Resumes of key management, a legal opinion, which I might mention, we do have a legal opinion example on the site, or will have one eventually on the ReConnect website. But the legal opinion should address the applicant's ability to enter into the award documents, describe all material pending litigation matters, address the applicant's ability to pledge security as required by the award documents, and addresses the applicant's ability to provide broadband service under state or tribal law. You also will need cost estimates of the proposed project, description of working capital, and of course, our favorite audited, unqualified comparative financials, and audited financials will be required also after, I'll get to that later. Continued, you'll also need historical and projected financial information, including an audit and sources of funds. Scoring sheet, analyzing any scoring criteria set forth in the current FOA. List of outstanding and contingent obligations, all required environmental information, certification from tribal official in support of project as needed or applicable, and any additional requirements as outlined in the Federal Register. Additional items needed to submit a complete application. Please note that the scoring criteria will be covered in more detail during the FOA webinar on the 18th. Please sign up today under the events. You'll see an events website on page 50, on slide 58 coming forward. Exceptions in the application for publicly traded companies that have an investment grade bond rating from Moody's, Standard & Poor's, or Fitch at the time of application submission do not need to submit NFSAs. Grant-only applicants offering an irrevocable letter of credit as security also do not need to submit NFSAs. These entities also will not be prompted to complete the financial section, including the audit. However, awardees will be required to submit a yearly audit. See 7 CFR 1740.80 on reporting and accounting. Financial feasibility. Generate sufficient revenues to cover expenses, have sufficient cash flow to service all debts and obligations, have positive ending cash balances for each year of the forecast pro forma period. By the end of the forecast period, meet at least two of the following, either tier of 1.2, debt service coverage ratio of 1.2% or the minimum current ratio of 1.22%. You must also demonstrate cash flow, positive cash flow from operations at the end of the forecast period. The following financial information is required for all applications. Again, unqualified, comparative, audited financial statements for previous years from the submission date the application is submitted. Therefore, startups are not going to be able to meet this requirement. Can use the consolidated audit of a parent, however, if the parent fully guarantees the award. Detailed information for all outstanding and contingent obligations, evidence of all other funding necessary to support the project, historical financial statements for the last 4 years, and pro forma financial analysis prepared in conformity with GAAP and RUS guidance. Just a side note, financial assumptions are often not explained well. Don't forget to explain them well as a project, as to project how strategic planning will impact your revenues and expenses and cash flow. And a quote, they are the bedrock of financial planning that drives growth and efficient operations. Next is technical feasibility. Determined by evaluating network design and other relevant information. Pursuant to the FOA, facilities proposed to be constructed with award funds must be capable of delivering the build-out speed defined in the current FOA, which is 100 symmetrical megabits per second. Network design must include a description of the proposed technology, network diagram, build-out timeline and milestones, capital investment schedule. The network design must be certified by a professional engineer. This is where I recommend that you look at using pre and post engineering consultants. Sometimes you save money and less rework in the end, but it's not a requirement. PE must be certified in at least one of the states where there is project construction. Certification must clearly state that the proposed network can deliver the broadband services to all premises in the PFSA at the minimum required service level. Another note that I might add is when you're estimating your budget, your cost expenses, relating to some entities want to do internal engineering, in-house engineering, which is allowed, but it does have to meet the requirements of the construction regulations, which will be on the website soon. But keep in mind that if you decide to change your mind, or if you're not eligible or approved and you've budgeted for in-house engineering, you're still going to have to pay. So keep in mind that if you have to pay for a third-party professional engineer and consultant, make sure you have that estimated accurately so that you don't end up running short on your budget. Additional considerations must list all required licenses and regulatory approvals needed for the proposed project and how much the applicant will rely on contractors or vendors to deploy the network facilities. We will now cover closing, servicing, and reporting requirements. Offer and closing. Successful applicants will receive an offer letter and award documents from RUS. And this is what I was getting to earlier, that this date isn't the date of when your 5-year build out starts. So just keep that in mind. You do have we do have more time. And I know 5 years doesn't sound like a lot of time, but sometimes it takes all of that. Construction. All projects must comply with 7 CFR 1788. And of course, NEPA requirements of the 1970 environmental program construction procedures, which will be added to the, as I mentioned, the construction procedure guide will be added to the ReConnect website very soon, and any successor regulations and any other guidance from RUS. Build out must be completed with 5 years from when funds are made available. Build out is considered complete when network design is fully implemented, service operations and management systems infrastructure is operational, and awardee is ready to support the activation and commissioning of individual customers to the new system. Servicing of grants, loans, or loan grant combinations. Awardees must make payments on the loan as required in the note and award documents. Awardees must comply with all terms, conditions, affirmative covenants, and negative covenants contained in the award documents. The sale or lease of any portion, can you go back one? I missed that last bit. The sale or lease of any portion of the awardee's facilities must be approved by RUS. And please note that award documents will contain the requirements for loan payments, terms, conditions, affirmative covenants, and negative covenants. Accounting, monitoring, and reporting. System of accounts for maintaining financial records. Annual comparable audited financial statements, report on compliance and internal control over financial reporting, and management letter. Also required, the RNC system, FYI, is the reporting and compliance system, and you do not want to lose your ID and e-authentication information when you sign up, because you will use that same information for the RNC system going forward. So don't lose passwords and IDs like I tend to happen to do. So on that, you also need balance sheet, income statements, statements of cash flow, rate package summaries, and the number of customers submitted 30 days after each quarter. The reporting and compliance system will generate the necessary reports at the end of each quarter, and awardees will also complete and submit these reports in the RNC system. We'll also need annually updated service area maps, compliance with RUS monitoring requests, retain records in accordance with 7 CFR Part 1770 Subpart A. I always just say keep your records for life, but you don't have to. Follow the Subpart A. Annual reports for 3 years after completion of the project. RUS reserves the right to deobligate awards that demonstrate its insufficient level of performance, wasteful or fraudulent spending, non-compliance with environmental or historical preservation requirements. We also may conduct a map, and a map just is kind of an overview, and won't go into great detail on that. And available resources. Webinars, of course, the next one is coming up on the 18th, and you can sign up under the events right below there. And I just want to say thank you for participating in today's webinar. If you haven't done so already, please put your questions in the Q&A chat box, and we will answer as many as possible. If you have additional questions after the webinar, please feel free to submit them to RUS at the Contact Us page listed below. And of course, I think there's a link to the GFRs, but if you Google GFR, USDA GFR Telecom, you will see us GFRs throughout the nation, and we are a great source to ask questions and discuss strategies and application info and technical assistance. With that, we'll turn it to the question and answer period.
Great job, Tim. And thank you everyone for providing questions throughout the webinar. We will start covering those questions now that were submitted. And please, if you have other questions, continue to submit. This webinar will end close to in about 30 minutes, so we'll try to get through as many questions as possible. So Tim, for your first question, can a parent and a wholly owned subsidiary both submit separate applications?
So, yes, they can. but they do have to have their, under the Q&A, under the ReConnect site, there's a great question and answer that will explain it much better than me. But as long as their financials are separate and standalone, then you will, and you have to meet all the eligibility requirements of the FOA, then you know, read the Q&A to cover it the best. But yes, that is an option.
I guess it's good to note also that they have to be two separate areas. So a parent and a subsidiary cannot submit for the same area, or they could. It's just that you'll be competing against yourself. We would only award one. But next question. Can a subsidiary use the same SAM.gov and DUNS of the parent, or do they need their own?
So each entity has to stand alone and have their individual SAM and DUNS number, because without you can't use the same financials. So you would need separate DUNS and SAM number, cage code.
Great, thank you. Next question. Is a project consisting strictly of middle mile infrastructure eligible to apply for a ReConnect grant?
And unfortunately, that is not allowed. However, for middle mile only, we are a last mile program. However, middle mile is allowed to connect the sections of the PFSAs that, you know, that need to be connected. So the middle mile between those are eligible.
Great, thank you.
I should say, Chris, you know, most applications come in with multiple PFSAs. So if you have one PFSA, then middle mile would not work. But if you have multiple PFSAs, you know, the middle mile between those connections would be eligible.
Great, thank you, Tim. So next question. How are financial requirements different for a nonprofit versus a municipality or a municipal entity type applicant?
Well, the financials, I guess I'm not for sure the question there, but financials would still.
So is there a difference between if a municipality was submitting financial, you know, for the financial information, is there a different requirement for a municipality versus a nonprofit?
You know, I would have to say that there isn't, but that's a question that you'd probably want to put in the contact us. I'm not really familiar with the type of audits that nonprofits conduct, but I would have to say they're probably the same, other than they're going to just report revenues and expenses differently, because obviously municipalities are you know, their revenues are tax based, et cetera. So as long as you you know, if you're uncomfortable with the audit that you have, check with your CPA to make sure that it meets the unqualified comparative audit, and you'll be fine.
Great. So to sum that up, the requirements are the same regarding what type of documentation needs to be submitted, but each entity may have a different way that documentation is collected.
That's correct. The other thing is, just kind of a side note for the municipalities, because there are points obviously for munis of 15 points extra for application. And one of the things I've ran into in some of my munis is that they don't currently have quarterly breakouts of financials. They just prepare annual audit. And so they've had to kind of scramble the jets to prepare quarterly reports that weren't normally provided until they were awarded ReConnect funds.
Great. So next question. Does RUS make any partial awards, or is it the entire project funded, or is it that the entire project is funded only?
Yeah, I think I don't want to say something wrong here, but the project is either fully funded or not. I don't think we're going to come in, other than maybe a loan area. Or our loan funding window allows flexibility back and forth. It's not competitive. It's first come, first serve on a rolling basis. So therefore, there could be, I could see potentially an applicant where there was changes made or something that could be massaged in the underwriting. But as to the 50-50 loan and grant combo and the grant, it's all or nothing unless there's something just, you know, out of the normal. I can't think of right offhand.
Great. So many rural footprints can be served by satellite internet service. Does satellite IP services qualify? And I would, Tim, just to gear you up on this a little bit, I would approach it from an eligibility review standpoint and as well as a funding eligibility standpoint.
So, you know, satellite is not eligible for, we do not fund satellite or cellular projects. So therefore, you know, we would not fund ReConnect Award for any project that was trying to produce a satellite network. On the other aspect, if you have a PFSA that and let's face it, there's a lot of areas that are out there with RDOF funds that were satellite based, and we do not count satellite against the household 90% broadband access, the 100 by 20, if that makes sense. So essentially, there's two sides of the equation. We're not going to fund satellite, but we're also not going to count cellular and satellite services against a potential application in their PFSA for broadband speed to the households.
Okay, great. So can loans or grants be used to serve commercial customers, or is the program limited to residential only? So looking at residential and business.
Well, that's kind of defined based in your PFSA. You're not going to get credit for the businesses, but our needs or our program is designed to build out to residential households. However, I would have to ask for the contact us. Chris, I might see if you have anything to add on that for a commercial. I don't know of anything that would allow us not to allow hookups to commercial, but that's not really our overall intent.
So and so these are two different, and in this thing question here, there's two different ways to look at this. When we're looking at eligibility as far as the sufficient broadband access of a PFSA, we only look at household coverage for that eligibility part. But if an award is made, the awardee will be required to provide broadband access to all premises, businesses, residential, and so forth, within each PFSA. And there is a difference there where that access has to be 100 by 100 megabits per second speeds, symmetrically and simultaneously. So yes, we could, commercial customers would be allowed to be hooked, you know, funding in the application to connect commercial customers.
Great, thank you. I thought so, but I just wasn't sure enough.
So you stated that, next question is, you stated there could only be one submission per period. Could multiple communities be in one submission?
As long as you met the eligibility requirements and the legalities of your audit and your DUNS and your SAM, you know, cage number, yes. I mean, multiple communities could join together, but you're going to have to be able to meet the 2-year, you know, well, essentially the comparative audit, unqualified audit requirements and any other requirements based on the FOA.
Yeah, and I think this question is pointing to the PFSAs. So instead of, I think what they're asking is, with the application, are you limited to only submitting for one community, or can you submit multiple communities within a
I see. I'm sorry. Yes, that makes a difference. So yes, your PFSAs can incorporate anything you choose it to be. You just have to make sure that each PFSA is not, duplicating services. It isn't in areas where there is broadband access above 100 by 20, and just make sure you follow the FOA requirements. But yes, multiple PFSAs. USDA RUS does not tell you, the applicant, where to build, nor what the speeds are, frankly. We do have on our mapping tool, we have a lot of great aspects to the mapping tool to help guide you and bring you to areas that might provide more points and keep you out of areas that would be problematic, such as duplication or protected areas, etc. But we do not tell you where to do, so that would be eligible as long as it meets all the requirements of the FOA.
Good, thank you for that answer. So the next question is, can an applicant submit an application for one PFSA as a 100% grant and then another application for a different PFSA under a 50-50 grant loan? So bottom line, Tim, can an applicant submit more than one application for different funding categories?
Unfortunately, the answer is no. You can start multiple funding windows. Say I want to start a loan and then I decide I want to start a 50-50, and I work on both of them for a while, and then I have to ultimately decide on which one. Only one submission. So I would either have to choose the 50-50 or the loan. I could not do both. So the answer is no, you could not do that.
Great, thank you. So in this question, and I'll give you a break here and take this one. So if an applicant fills out an application and then starts requesting permits, will the permits be paid for if we do not get selected for the grant? And so just so everyone understands, if you incur any expenses as pre-application expenses, and then you're not awarded the application, then RUS is under no obligation to reimburse any costs. So you are engaging the application at your own risk. But if you are a successful awardee, then talking about permits, permitting is considered a construction type cost. So therefore, you should not enter into or incur any costs for permitting until your environmental review has been completed, because it is considered a construction cost. So just to keep that in mind. So next question. Please describe the impact of current RDOF awards in some areas of an existing and different ISP looking for a grant to enhance broadband in the entire area, including those with an RDOF awarded funds. So kind of discussing, an applicant overlapping existing RDOF awards.
So I think if you don't mind, under the Q&A, I'm going to read a fairly lengthy answer, but I think many people probably like this. So can areas under consideration for RDOF be eligible for ReConnect? And the answer is yes. Rural development will offer funding in areas receiving or under consideration for RDOF, because RDOF funds both operational expenses and capital expenses, or award because RDOF funds both operational expenses and capital expenses, while ReConnect funds fund only capital expenses. However, we do recommend that you explain why rural utilities should provide additional funding. For example, will the applicant commit to an accelerated deployment schedule if it receives RUS funding? RUS will also require all ReConnect awardees receiving or under consideration for RDOF to submit a statement certifying that the funds requested from ReConnect have not been and will not be reimbursed by the RDOF award. That is, funds may be used only for complementary purposes and not for duplicative ones. So hopefully that kind of answered the RDOF question. You might have more to add, Chris.
Oh, great, Tim. No, there's not a prohibition from overlap. They do, like you said, they just need to provide that support of why ReConnect funds will not be duplicating. So next question, is a 501c3 nonprofit organization eligible as a primary applicant? Nonprofit eligible.
Yes, they're eligible under eligibility. Basically, as long as you're not one of the three, a co-applicant, partnership, or a individual, you are eligible. But you would need to meet the audit requirements and, of course, all the FOA requirements. And just a point that if that's your first audit for that nonprofit, you know, that's not going to work. But theoretically, yes, they're eligible.
Great, thank you. So next question, I'll give you another break here, Tim.
Awesome.
100 by 20 is what you talk about for existing areas. Is 100 by 10 existing areas eligible for grants? And so it seems what this question's about is, do you have, when we're looking at eligibility regarding sufficient broadband service, are we looking at the up and down speeds has to be acquired? And that is correct. So if there's an area that has 100 megabits per second download, but they only have a 10 megabit per second upload, it doesn't meet the requirement of the 100 by 20. So the answer is yes. Areas that are confirmed to only have 100 megabits per second download and 10 megabits per second upload would still be eligible for grants or loans, or a combination of each. So Tim, question here is regarding administrative costs. Are those allowed to be reimbursed under the program?
They are not. Operating expenses are not allowed. And so what I often tell clients is under your consulting, you know, if they have trouble kind of coming up with budget line items, what I have stressed to people, not to say that it's the only way, but part of some of the costs based on the 217 engineering contract, there's a section called 506, which breaks down a lot of the costs eligible for the program. So, you know, use that as a guide, and that'll help determine, you know, what some of those expenses are. You know, obviously there's a lot of other eligible expenses, but that gives you a guide on where to start.
Sounds great.
And Chris, if you don't, unless you had something to add, I wanted to retract on the first question of, I didn't do very well on my answer about would entities owned by the same holding company or that. I wanted to read a question and answer. Can a subsidiary use a parent company's financials? Financial information and projections must be those of the applicant, and consolidated projections are not acceptable. But can they actually apply as separate entities? As long as each entity is organized as a standalone company, then each entity can submit separate applications. However, if a consolidated, unqualified comparative audit containing each entity's financial information is not available from the parent holding company, each company must independently provide the unqualified and comparative audited financial statement for the previous fiscal year of the applicant from the date the application is submitted and meet all other eligibility requirements as standalone entities. I think that better answers that question I butchered earlier.
Great, thank you. So Tim, please describe the matching requirements for 100% grant requests.
So kind of twofold answer. So the requirements are 25% grant match for the grant. However, if your PFSA, all of your PFSAs, if you have more than one, meet the 75% of the area that are socially vulnerable, or if they're on a tribal government or tribal land, then the matching requirement is not required. But only in those cases would the 25% not be required. But that 25% is put into what we call a PDA account, And basically that money, matching funds, has to be expended prior to the grant funds, other than your first submission of your FRS for pre-application, expenses will come directly out of your grant. That's the only time.
Great, thank you for the answer. Are grant writing and grant administration cost funded?
No, we do not fund anything regarding grant writers or fees or anything like that.
So how would an applicant incurring some of these fees for pre-application expenses? So would those would be reimbursable though, right?
Say that again, I'm sorry.
So if they have assistance putting the application together as pre-application expense, that could be funded.
Yeah, that would be, what I refer everybody to is to read through, and I apologize, the verbiage of the FOA regarding the pre-application expenses. So if there's any flexibility to that, it would be within the pre-application expense. And of course, that's capped at 5%.
Great, thank you. Next question. Can an electric co-op with a wholly owned telecom subsidiary jointly apply, or does the co-op apply standalone? So the way this question is presented is like they can jointly apply, which would mean co-applicants, and that is not allowed.
That is not allowed. And as the cooperative, they would be entitled to points, to be a muni or cooperative.
Great, thank you. And I also want to just add a little bit more with this one. So the applicant, as an applicant, you really need to determine who is going to own and operate the network. So therefore, if the co-op is going to be the owner operator of the network, the co-op needs to be the applicant. If the subsidiary is if you want the subsidiary to own and operate the network assets, then the subsidiary must be the applicant, because we do not allow transfer of assets. Next question. Can affiliates of a company apply separately from the parent company and each receive an award, or do the parent company and its affiliates have to apply in one application? So different entities, can they apply for different areas and different applications?
Well, I think the answer that I read earlier, as long as they can prove the audit and the DUNS and the CAGE code, Sam, and they can be standalone entities, that's going to be the question. And so theoretically, I'm going to say yes, but you're going to have to be very, very, you're going to have to be able to prove those standalone. And as I read earlier, we do not allow the consolidated financials and projections to be able to be stood for the financial pro forma.
Okay, great. So I'll give you another break here on this one. So the question comes in from the attendee is, if NFSAs don't have to be provided with an ILOC, when an ILOC is used in place of standard grant security, does this mean that without an ILOC, RUS is claiming an interest in NFSA assets? So to break this down, if you do have an irrevocable line of credit, as Tim mentioned during the presentation, under the grant funding, then you would not have to include the NFSA areas in the map. Now, just want to make this clear, as it applies to grant funding, RUS takes collateral on the funded grant assets. Whenever you have a grant, a mixture of a grant loan or 100% loan, RUS would claim collateral on all assets of the applicant.
And just to point out that, that's correct. Thank you. And, some of those loan and grants, we can do a pari passu agreement. But you're right on the letter of credit. You know, you wouldn't need it necessarily if you're just trying to avoid the NFSAs, because we're only going to take collateral on a grant only of the funded award network.
So a question here, and I think it relates to as far as matching is, the question is there a minimum capital investment requirement of the ISP for 100% grant?
I think if they're talking match, then I'm not sure that question I understand fully, but yes, 25% match is required upfront. So, you know, you would have to have at time of closing, you have to have proof of the ability to procure and have access the 25% of the total project, total grant.
Great, thank you. So here's a question regarding PFSAs. Is a PFSA predetermined, or is it created by the applicant within the highlighted map?
So great question. PFSA is created by you, the applicant. It can be any form other than, you know, we suggest using on the mapping tool, you can use a circle or a square, a rectangle, or a polygon mapping tool to build your PFSAs, and or, you know, many multiple PFSAs. A lot of applicants will upload a shapefile or KMZ file to the mapping tool. So you determine what the PFSAs are, but because of that, you also are putting your application in harm's way if you do not know where the speeds are and where the problems lie, so to speak. Because if you do not meet the 90% unserved, so let's say that your PFSA has 100 households and we find 11, let's say there's a PNR filed on there of brand X ISP files a PNR and proves to us that there's 11 households served with over 100 down by 20 up speeds, then your entire application, even though you might have 40 PFSAs in that application, your entire application will be thrown out.
Okay, thank you. So we're getting close to the end of time here. We're going to wrap up a few more questions. I'll take this one, Tim. This is from the attendee is asking to expand on the answer regarding middle mile eligibility. So as the ReConnect program is primarily for bringing services to residents and businesses in rural areas as they, qualify. So to get those networks out there, there may be what we call a common network or a middle mile component where it may connect back to an existing point of presence or an existing equipment cabinet, or it may connect PFSA and PFSA. So as long as the middle mile portion is allocable, allowable, and reasonable for the project requested for in the application, then yes, funds can fund that middle mile component for construction. But the prohibition is we just do not accept middle mile only applications. It must be a component of a last mile application. So hopefully that clarifies that. So next question, Tim, real quick. Our fiscal year ends 12/31. Can we use our 2020 audited financials for this application?
Well, I'm not sure about years. I know, as a comparative, you're gonna use what you have. So I'm gonna say that because you wouldn't have, I mean, you're gonna have to use what you have available at this point in time, because some audits might not be done until March, which is after the window. So I'm going to say that's I think you want to work with your, check with your GFR just to make sure. But you're going to use your projections for your pro forma, and you're going to submit that unqualified comparative audit. So I think you're going to be fine.
Okay, real quick question here. And I just lost it. Sorry about that. Is a match required for a 50-50 loan grant?
No, your match is only required for a grant. So the 50-50, the only requirements there that you're going to really, other than all the eligibility requirements, is meeting the debt service coverage ratio or the current ratio or the tier ratio after the end of the pro forma projection of 1.2%. 2 of the 3, I should say. And cash flow positive.
Great, thank you for that answer. So here's probably one of our last questions, and we'll wrap this up. If the FCC map states a census block has 100 by 20 megabits per second download speeds, but you have evidence to the contrary, what is the process to establish the block is actually unserved?
Well, to best answer that is there's a great Q&A question on the ReConnect site, but essentially the FCC data is not inconclusive, I think is what I'm trying to say. Hopefully that's the right word. So just because the FCC shows that the area is served over 100 by 20, you can, if you know that it isn't, you can challenge those areas. However, realize that whoever is claiming that service is going to most likely file a PNR within that segment of your PFSA. And when we go out with boots on the ground and do our desktop reviews and our field reviews, we're going to determine if it meets it or not, and if there's 90% unserved. So the FCC data doesn't necessarily disqualify an application, but you're going to have to prove it and prove that area.
And to add on to that real quick is, we do not require you to draw your PFSAs restricted to census blocks. You can draw within our applications whatever shape of a PFSA you desire. And so even though a census block under the FCC, you may find that the census block is claiming 100 by 20 megabits per second coverage, you may be covering the portion of that census block that does not have that coverage. Because as we know, the FCC data doesn't it populates for the entire block, even though 100% areas may not, 100% of the premises may not be covered.
And just to add on to that, under the Q&A, I found that I had a second to find it. It says you are not required to treat current publicly available FCC 477 data as unquestionable proof of what speed service currently exists. FCC Form 477 data can be used as one source of data regarding sufficient access to broadband.
Thank you for that addition.
Well, I'll just read then, thanks for joining. If you have not yet registered for the next FOA webinar, which is on the 18th of this week, please do so using the link provided. This webinar will cover more detail the ReConnect requirements outlined in the fiscal year 22 FOA funding opportunity announcement. And I'll turn it back to Taylor.
Thank you for joining us today. Have a great afternoon.